Morning, everybody. Welcome to the latest edition of Talking Ball. It's the 16th of November. I'm Joe, joined by Steve this morning. How you doing, Steve?
Yeah, good, thank you.
Good. Got there in the end. Having a few
Yeah,
issues with the old streaming software, but hopefully people are tuned in and watching. Welcome if you are. Please feel free to get involved. Post up your comments on the stream. Let us know what you're looking at this morning, and we'll do our best to cover as many markets as we possibly can. Before we do that, let's get into the latest headlines and find out what's moving markets across the world. First up, we have the geopolitical tension sparking high volatility across markets. There was volatility surrounding the US data release yesterday and another round of sharp moves after the European close. A missile landed in Poland close to the Ukraine border and killed 2 people yesterday. There was speculation that the missile had been fired by Russia, which sparked an immediate slide in risk appetite amid fears that there would be a NATO response and a conflict escalation. There was a high degree of uncertainty, but intelligence reports suggested it had not been fired from Russia, and risk appetite recovered on Wednesday. So yeah, pretty scary stuff there. The dollar recovered slightly from 3-month lows following a sell-off yesterday. We saw Euro US dollar jump to 4-month highs, but the US currency recovered ground quickly in very choppy trading. Geopolitical fears after the missile news were significant in providing support for the US dollar. In Germany, economic sentiment improved. The German ZEW Economic Sentiment Index recovered strongly to minus 38.7 for November from a previous reading of minus 59.7 and stronger than the consensus forecast of minus 52. The US producer prices inflation moderates. We saw that increase by 0.2% for October, below the consensus forecast of 0.4%, with a year-on-year rate declining to 8% from 8.4%. In terms of the New York Manufacturing Index, the index rebounded there to 4.5 for November from a previous reading of minus 9.1, and that was above the expectations of minus 5. One of the Fed chiefs, the Atlanta Fed president, Bostic, stated that the full impact of monetary policy won't be felt for many months, and that the central bank must look to economic signals other than inflation as a guidepost. He added that there are glimmers of hope on goods inflation, but sector service inflation needs to slow as well, as he sees upward pressure on wages. More hawkish rhetoric from the Swiss National Bank Chair Jordan, again stating that monetary policy needed to be tightened further, reinforcing expectations that there would be a further rate hike in December. And fresh off the press this morning, we had the UK inflation number reaching a fresh 40-year high. The headline UK CPI inflation rate increased sharply to 11.1% from 10.1%, and that was also above expectations of 10.7%, as higher energy prices had an important impact. The data reinforced recession fears with a further squeeze on spending. So lots of headlines over the last 24 hours. Let's take a look at some charts, shall we? Steve, do you want to kick us off with a look at Bitcoin, maybe?
yeah, sure. Just share my screen. Yeah, taking a look at Bitcoin to start off with. Obviously, quick reminder of the overall formation is negative. We've broken down from this head and shoulders formation, and we're pushing down towards the next support level that we see. It's a bit of a range, too much of a range to really detail. Anywhere between 14,000 and 12,000, which is taken from horizontal levels. We've also got some Fibonacci projection levels not on this chart, but that we've highlighted before. Measured move target for this head and shoulders formation is actually below 0. So, but don't panic, Mr. Mannering. I'm sure it won't get that low. Triangle formation on the daily chart, or this it's a bearish pennant type formation. So again, this type of formation will have a measured move target, sort of like anywhere really that's targeting a move to just below 10,000, 9,800. If we are to extend the pole down from there, actually you'd probably take it from probably a break or back, like almost like an ABC. So it brings it in around about 11,100. Anyway, quite a long way away. So don't expect it to get there anytime soon, but the pressure is on. We've had a little bit of a stall in proceedings and a little bit of an uptick over the last couple of days. On the gun to head challenge, I've been selling into this Someone quite rightly highlighted. I highlighted a bearish channel. It wasn't really a bearish channel because it only had 1 point. This is more like it, almost like a descending triangle formation. Really do. If we do get a break of the 15,800 level, or even more significantly of the swing low 15,750, then I would expect a decent extension towards the 11,000 level. So watch out for that. Anything else to look at? Ethereum breaking a little bit higher, so outperforming a little bit. If you want me to cover any others or are interested in any other cryptos, give me a shout and I can cover them after Joe's FX or something. Diving into gold commodities, we're looking at gold and oil and natural gas. So quick look at those. Also, I might look at copper as well because I thought I saw something interesting yesterday. The rally higher in gold, obviously, on the back of the collapse in the dollar over the last week or so. So it feels a little bit like that dollar collapse maybe stalling slightly. I had a quick look on the dollar index. Joe's going to cover it off in more detail. But the levels really to watch. I did a video on this gold yesterday, and we've got this double bottom formation which is formed. Now, I'll show you where the measured move is in a second, but we've broken through the resistance at 1730 to 1735, and we've extended higher. The 38.2% fib retracement comes in at 1788. We've got resistance around $1,800 to 1810. We've also got 200-day moving average coming in around about there. So that's a decent level to watch. My overall feeling on gold is that we've sort of we've broken through this double top formation was formed and confirmed. However, it hasn't managed to break higher, so we're retesting the strength of this double top formation. If we manage to get back above the 1807-08 level, then I would be negating this formation and talking more about the short-term bounce we're having. That had a measured move target all the way down to below 1300. So thankfully for gold bulls and gold longs, that didn't play out. I was going to talk about the measured move target maybe on the 4-hour chart. So double bottom formation, measured move target is 1837. So that is basically saying we're going to take out the resistance around 1800 to 1808, the 200-day moving average as well, and then project higher. We have obviously stalled at 1786 currently. 1786, funnily enough, was the swing low on the 16th of May, so a decent level. Resistance now, which was formed out of previous support. Let's take a look at crude oil. Crude oil seems to be sort of like producing these lower lows and really sort of like struggling to sort of push higher, but it's still, if we look at it on a daily chart, we can see we had this tentative support level or tentative trend line and a tentative trend line, so a tentative triangle formation. We need to have multiple touch points. We need 3 touch points on both of these potential trend lines, and we haven't had it yet. So we are we've basically moved sideways, we can say, you know, from the start of August to now, price is unchanged. So we have had sort of like a big spike higher, a big dip lower, but we're sitting around unchanged. Overall, this is from the highs that we saw above $120 all the way down. So it is still overall a bearish formation. Let me just get rid of these blue arrows here. And we can see the moving average lines. We got the what we've got up here, 5500 and 200, that crossover there, and we're still sort of below the 100-day moving average on crude oil. Price action on the short-term basis, what we're looking at, resistance up at 92.66. It's stalled there, reversed really nicely with a shooting star candle all the way back down, and we've bounced off this 50% Fibonacci retracement level of the move from the swing low on the 26th of September up to the swing high on the 10th of October. Actually, did get higher than that on the 7th of November, but that is what the measurement is from. So overall, still, I know TAF is really bullish on this, but we're sort of like, I suppose, this morning, maybe looking to buy dips. or sell into the resistance around about 89.35. That's the sort of like levels to watch. Nat gas still remains slightly bullish in this gentle trend support, the upward trending support line. We've got multiple touch points here. Again, support coming in around about the 614 level. Really a break of 590, and that should open up the downside. But until then, buying dips looks to be the way to go. I don't know what I looked at on copper yesterday. Yeah, it was this level here on the weekly chart. It really sort of like resonated with the when we had the sort of like the swing lows of the weeks of March the 22nd and March the 29th. That was 394, and we broke through it, and that support turned into resistance and held really well over the last couple of weeks, and prices have rejected the break above it. So for me, that looks a little bit bearish. You could say we were forming somewhat of a double bottom formation, which has failed. So there's still a little bit of time to play out. We're only halfway through the week. Will natural gas get some sort of reaction? Again, going over to the daily chart, we stalled in front of the 200-day moving average, but we are getting this crossover on the shorter term 55 100-day moving average. So again, look out for that. A few Fibonacci lines messing my chart up a little bit. Just a quick look at where the Ichimoku cloud were above it. So short-term trend is positive, and we should find support all the way down at 350, which was a decent level before. I think that's it, unless anyone's asking for anything other than equities.
No, we've got a request for Aussie yen, which I'll get to in a moment. Obviously, if anybody else has anything they want to take a look at, we've got one for sterling yen as well. So let's get stuck into FX then and have a look at what's going on there. Starting off actually with the usual candidates. So dollar index to start. So we've seen this breakdown below major support at 107.58 to confirm some sort of top pattern, I believe. Yesterday we saw a big move lower, coming up just shy of this 38.2% fib level at 105.13 before the buyers then stepped in. So this was later on in the session, which was created by these tensions that we heard about with the situation in Poland. So the dollar caught a bid, people buying into that as a bit of a safe haven, worrying about obviously an escalation of the conflict, but we are back on the selling side of things today. So we're down by 0.3% as things stand, and I still think at some point we are going to get a test of these support levels between 105.13 to 104.63. So still in favour of selling into rallies towards 107.58 and expecting lower prices. So euro US dollar yesterday looked as though it was going to break out above this resistance at 103.48, and this is why we always talk about looking for closes on breakouts on a closing basis, because yesterday we saw a big rally to the upside, and I'm sure any breakout traders out there may have looked to get long on that breakout there. But on the close, we actually closed back below the major resistance. So we need to be careful of things like that because we can get faked out by these moves. But we are on the front foot again today. So a pullback to that newly formed support would have been a buying opportunity. We are on the front foot, up by 0.5% as things stand. Still looking for upside towards this 38.2% fib level, which comes in at 106.10. And also just above that, we have the measured move of this bottom pattern that we projected higher to come in at 106.52. So still looking pretty good, I think, for euro versus euro dollar. Take a look at cable. Again, another situation where we kind of could have expected a breakout yesterday on a closing basis. We kind of did hold on to it, but the fact that we've got this long wick on the candle doesn't really give us too much confidence in this continuing to move higher. But we are higher again today, only by 0.8% as things stand, and we are above this 38.2% Fibonacci retracement level and this black line of resistance that we've got at 117.59. So I guess still looking for higher prices there, targeting a move up to 122.98. The inflation number obviously today is going to have an impact on sterling, and also we've got this budget statement tomorrow, so it's likely to be a volatile few sessions for anything linked to sterling. So do be careful if you are exposed there. You need to keep this in mind. We are expecting quite large volatility. Let's go back to some of the other dollar majors. We can look at Aussie US dollar. Completed this inverse head and shoulders, broke out really nicely, and pretty much since then we've seen consecutive up days, but it is struggling to overcome this downtrend resistance line. We tagged it yesterday, pretty much at it again. I think if we can get a nice impulsive move above that, then we can start looking for higher prices. Based on the fact that we've seen such an impulsive move higher, I think I'd like to see some sort of pullback initially, just to confirm and accept that prices are now going to trade above this 66.81 level. Then if we get a break above the trend line, we can start targeting a measured move of this inverse head and shoulders to 68.73 and potentially beyond. Let's look at dollar CAD. Really nice head and shoulders here, broken down, now trading at the 38.2% Fibonacci retracement level. Pretty much tagged it to the pip yesterday. So from a technical analyst perspective, that's the kind of price action that we want to see. We may now see some consolidation before maybe a fresh break lower in line with the newly formed trend. Still looking to target a move down to this region, which is 130.14 to 179.92. Looking at dollar Swiss, that continues to hold support from these key swing lows that we posted back in August. Following the breakdown of this double top formation, we easily hit the target of that. We then went through the 50% Fibonacci retracement level, and we're approaching this trend support level and this horizontal support level. And as we can see yesterday, the candle that we posted was quite a bullish one. So we made lows down to this level. We actually closed positive on the day, which may provide some encouragement for traders to try and buy that. And if you look at what we've got here, we've got quite a nice range really. So maybe there is an opportunity there to buy that at the lower end of the range. But obviously we've got to factor in what dollar index is doing. And overall that still looks quite bearish. Dollar yen. So following the breakdown that we saw last week, prices are now starting to try and consolidate or stabilize around 139.38. We saw a decent move lower yesterday, but recovered a lot of that on the dollar move later on in the session. Not really too sure what to say about this. I think maybe we'll see some consolidation. I'll be looking for some fresh patterns really to indicate the next direction there. But my gut feeling would be lower prices in line with obviously the weakness that we're seeing in the US dollar. So over to these requests that we've got. So we had one for Aussie yen. Now this is the daily chart to start with. Quite kind of sideways and choppy price action really here. No definitive trend in place in kind of this time frame that I've got on the chart. Obviously, if we go further back, we know that it's been trending steadily higher given this bout of yen weakness that we've seen. But if we look at the sort of shorter term time frames or drill down into this phase here, we can see a bit of a range has formed. The lower end of the range coming in at 92.92, the upper end of the range somewhere between sort of 95.74 to 95.43. So can we see anything going on the intraday charts? Let's just take a quick look. The request today was suggesting that they were short of Aussie yen, which I can kind of get on board with. Again, let's just bring this range into focus. So something along these lines, not exact, but we have a range something like this. If we look at where price is at the moment on the the hourly charts, we can maybe see that things are starting to roll over a little bit here. So I think if I were to be trading this on the short side, I'd probably want to stop quite close by, maybe just above this 94.65 level, and maybe looking to target a pullback to the lower end of this range. So from a risk reward perspective today, that looks quite nice. But I think upside, if you're going to have a stop on this that plays this range, you probably be wanting to enter somewhere around here, above 95 probably, with a stop loss above the upper end of the range. So my thoughts on there, I wouldn't want to give it too much room if you are short, but I can see the logic for a short trade on that. The other trade is on sterling yen. Again, yen being a bit of a theme today. Let's just again check out the daily chart. So for me, I think there was a head and shoulders top pattern, as I've mentioned, on a couple of my guns ahead trades in the last couple of sessions. So we've got a left shoulder here, then we've got the head, then we got the right shoulder, then we saw the breakdown, but it hasn't been too classic in its reaction since then. We've seen a rally in the last 3 sessions. Certainly not anything that indicates a reversal or a rejection or invalidation of this top pattern, but it is pretty choppy. So let's take a look at the intraday chart. So let's go 4 hour. We can really highlight the head and shoulders here. I was looking for a big move lower. So at the minute, it looks like it's consolidating within this corrective channel. Maybe it's some sort of flag pattern. And the bias for that, I think, would be for a break lower, but probably now need to see confirmation of that and a break to the downside before I'm going to jump back into this one anytime soon. So I don't think the head and shoulders pattern is dead yet, but I think we need to see more confirmation that we're going to start seeing prices move again to the downside. And we may get that in the next couple of sessions, given that we've got obviously reaction to the CPI number today, and we've got this budget statement tomorrow. That's it from me on the currencies, unless there's anything else that people have asked
Nothing
for.
else popped
Perfect.
up, mate.
Steve, can you run us through some indices? Maybe do the US ones and I'll do the Europe.
Yeah, of course. Yeah. So just a reminder, Dow has broken through this downward trending resistance and has moved higher. Hasn't quite taken out the resistance of 34,270, which was the reversal formation that we formed on the week of the 15th of August with this evening star formation. So bit of a negative candle so far, a bit of a doji indecision. So this rally higher, although we've sort of taken out last week's high, it didn't take it out for long. On the short-term chart, we've got an inverse head and shoulders that we've highlighted. Looks like we're coming down to retest that neckline. And again, the daily candles over the last few days don't look too clever to me. Looks like this rally is stalling. I know we may have figure out later. I can't remember what it is, but retail sales, is it later? I can't remember, but that should sort of like add a bit of volatility and maybe negate last week's really positive move after the inflation figures last week. On the Nasdaq, we haven't quite broken this downtrend line. That comes in at 12,550. Also, we've got horizontal resistance at 12,875. Although last week's candle was very positive, a bullish engulfing candle, the move higher hasn't really been anything to write home about. In fact, yesterday's candle was a shooting star, so that's a bit concerning. We've got the moving average lines coming in here. We've got the 100-day moving average, which we poked our head above yesterday, but we've also got we're in the Ichimoku cloud. So this inverse head and shoulders has stalled at resistance. And although we're on a slightly more positive note than when we closed last night, nothing again really to sort of like set the world on fire at the moment. We're trading around 4,000 on S&Ps, and we've got a really pretty interesting move. The inverse head and shoulders worked to a T here. The measured move target was 4,044. The high yesterday was 4,042.6. So pretty decent. And we also had the 200-day moving average, which capped gains all the way back on the 16th of August as well. Shooting star candle after a pretty bearish engulfing candle. So this is the point of decision time today. I think Wednesdays always I think we're due some decent volatility today. We could quite easily see these give up the gains. The one thing I'm looking at, or sort of basing that on as well, is it still feels that like there's a lot of pressure in the cryptocurrency world, how all those cryptocurrencies are interlinked. And I think it's a bit of a mess and people aren't talking about it. So yeah, I think that could be a bit of there could be some fallout over this week in cryptocurrencies. Yeah, that's about it on the US side of things, Joe.
Okay, let's take a quick look at Europe then, see what's happening there. So obviously we're off and running in the European markets today. The French market is still on the verge of this breakout. Large level of resistance between 66.01 to 66.26. Posted a reversal yesterday. We made fresh highs, but closed ever so slightly higher on the day, but reversed quite a lot of those gains. Still obviously trading in a decent upward trend in the very short term, posting what looks to be a bullish outside day so far today. I think if we can get above yesterday's highs and make them stick, so on a closing basis, then we can really start looking for higher prices on that. Take a look at Euro Stoxx 50. That has broken above resistance at 38.21, but it is fast approaching a massive band of resistance. So if we look back to the left-hand side, we can see a number of key lows that have acted as resistance previously. This is also a 61.8% fib level. So a mammoth amount of resistance that I think this market needs to overcome before we can get too excited about higher prices. So watch this space on that market. On the DAX, we've broken above resistance at 13,975, looking pretty strong. Bit of consolidation over the last couple of sessions, but again, fast approaching a 61.8% fib level at 14,576. The move higher has been pretty much a straight line one, so I wouldn't be surprised if we do get a pullback at some point to retest this newly formed support at 13,975, consolidate around there, build a bit of a base and acceptance of price, and then maybe we can start heading higher. So that would be my take there. Let's finally wrap up with the FTSE 100. So a bit of a mixed day for this yesterday because of the movement that we saw in the US dollar. Ended up being a pretty nothing day really, but it's still rallying into these resistance levels that we've got on the chart between 7,370 to 7,430. If we can start breaking above those, taking out that sequence of lower highs, then maybe we'll start looking for a move towards the highs that we posted back in August, and then eventually back up to these highs that we posted in April and February. So still trading in a bullish channel, and I think why that's the case, it probably is a situation of buying on dips, but do be careful with that. I mean, it's just such a strange market due to the influence it has of the US companies that are listed in the FTSE 100. Okay, that's it from us on the chart side of things. Now we can take a look at the gun to the head trade ideas. So this is where the three of us usually participate in a little bit of a game where if we had a gun to our head, what would we trade right now? So under a bit of pressure, picking a trade live on the air, we're placing these ideas at market. All of the ideas have got stops and targets and risk reward ratios in excess of 2 to 1. They all get published up to our TradingView profile. So if anybody wants to check them out and see how we've done previously, you can do so. We also maintain a pretty substantial spreadsheet of all of these trade ideas as well, which has been running throughout the entirety of the series of Talking Ball shows. And yeah, we're approaching 700 trades, Steve and myself. But our P&L on this is looking pretty rock star at the minute. It's over a 200% gain in that time period. Obviously, it hasn't been a straightforward ride. We had a decent move up over the first few months that we started, then spent many months in the doldrums pretty much throughout the pandemic before now re-establishing new highs on that. So going pretty nicely. If we take a look at how the trade ideas went yesterday, I was selling sterling yen, looking for a move lower in line with this head and shoulders top pattern, had a really tight stop loss, and as you can see there, I was stopped out sadly. So a -1R trade there. Steve was selling rallies in Bitcoin, looking to trade this potential channel. It just didn't really go anywhere, which is very strange for Bitcoin. I think you were 0.16R on side with that yesterday, Steve. So a win's a win. And if we take a look at Taf's idea, he was the savior yesterday. He was buying oil. This is his trade idea. Taf's guns ahead into this support level here. And if we click the play button, we can see that although he came very close to getting stopped out, it didn't hit the level and it went on to hit his target, making a
very nice indeed
96R return yesterday. So let's have another go today. What have you got up your sleeve, Steve?
I've got no sleeves on, so there's nothing up my sleeve, but
Okay.
I'm looking at Bitcoin again. I'm determined to nail a winner in this. So main formation I'm looking at is bearish pennant formation. It is early, it hasn't broken, so normally you'd wait for a break, then you'd get onto it. I'm trying to get in early. I'm seeing that it's Bitcoin really struggling to break through this resistance. So if we break it down to this this hourly chart, we can see how it's really struggling, posting lower highs. So I'm looking to sell this at 16,815, targeting 13,815, because I think if we do get a break of this 15,600, there'll be stops and it'll fly lower. So my actual stop itself is above the swing high here, 17,315. Already written it up, so just going to press publish.
Very well prepared, Steve. I am struggling today to find anything that I like the look of. So I think I might jump on the old oil bandwagon.
Well, don't go against TAF. Whatever TAF has done, just copy
No,
it.
that's what I was going to do. So let's have a look at this. How are we looking first of all? So daily chart, I've got break of a channel, formation of a head and shoulders, possibly. Arguably confirmed there. I always prefer to see it take out the neckline rather than the horizontal. Rather than the slanted ones. I always prefer a nice horizontal break. So ideally looking for a break above 92.66, but I don't think this is dead yet. I still think there is a possibility that we could go higher. If we take a look at the 4-hour chart, we've got a close potentially forming above the 10 period moving average. We had a nice candle here yesterday at 3 o'clock. So let's have a go at buying this, shall we? Seems to be a nice level of support here. Going to go below that low that was posted on Tuesday, and I'm going to target a move up to those highs there. So
Oil
nice
inventory's out later as well, Joe,
reference.
so you should get a result at least in that.
Yeah. Okay. So let's target that. Gives me just a shade over 2R as a target. So getting at 86.46, target 92.66, stop 83.43. So that's my trade idea for today, and I'll get that published up very soon. And as Steve mentioned, we have got oil inventories later, so do be careful if that is a trade that interests you today. Okay, other data that's due out. 1:30, we've got US retail sales. We've also got consumer prices from Canada, so the latest inflation reading there. At 2:15, we've got the Bank of England Treasury Committee hearing, and then at 3:30, we've got the US EIA crude inventory numbers. Overnight, we've got numbers from Australia from the latest employment report, and then tomorrow is the big one in the UK. We've got the UK autumn statement, and then we start looking forward to the global PMI flash data, which is due out on the 23rd. So that is that from us today, Steve. Unless you've got anything further to add?
Nope.
Lovely. Let's wrap it up there then. Have a great day, everybody, and we'll be back tomorrow.
Cheers, everyone.